All right, well, welcome to another video here in Mortgage Clarity. And today we're going to highlight a specific program that falls into that non-QM or non-qualified mortgage category. If you want to know more about what a non-qualified mortgage is compared to a qualified mortgage, check out my other videos down below. You'll find that there, and I'll give you all the details about that, whether or not it's good or bad, and so on. So today I'm going to highlight an asset depletion and an asset qualifying, and we're going to talk general terms here because what you'll find with all these QM or non-QM products is the requirements the lender will ask for will vary from lender to lender. They're not going to be a uniform kind of rule of how you do things like you do with Fannie Mae and Freddie Mac. So again, high overview of what these programs are, kind of how they work. And if you want more information, you want to know more about our programs, how they work, reach out to me. Be sure to hit the like button, add a comment, and subscribe. Okay, so an asset qualifier, asset depletion. These are two different programs. So you're going to use one or the other, but they're both tied to your asset. So let's start with the asset depletion. This is a program where you're going to use the assets you have available as a way to generate an income stream and then use that income to determine whether or not you qualify for the loan you want. So you're going to go back and look at debt to income ratios. So for example, what we would do here is, let's say you have $1 million in assets. What the lender is going to do is say, okay, with that $1 million of qualified assets, not all your assets you have may qualify. So again, it's going to be qualified assets per the program. But the lender is going to basically say, well, let's say we have a 20-year loan for $1 million at a rate of 3.99%. If you were to do that and throw that into a mortgage calculator, what would be the monthly payment requirement on that? And you would derive at an income. So based on that income now, we're going to put that back in there. So basically, it's like looking at your assets as if you're going to borrow it, lend it all out. Let's just say you're going to lend all your assets out at a set rate on a 20-year term, and you're going to receive payments, and we're going to use those payments as your income. So very simple way of looking at that. Okay, so now let's go to an asset qualifier. What's different about the asset qualifier compared to an asset depletion is you're not deriving any kind of income. So there are no debt to income ratio considerations on this program. Based on the loan size you're looking for, based on the amounts of debts you have from maybe other mortgages you own or other things on your credit report, the lender is going to look at your assets and determine whether or not you have enough assets that exceed what they feel as a comfortable zone so that there's enough there. So even if you didn't make any income, you're going to borrow $500,000, you have $1 million in assets. Well, the assets are there sufficient to pay off the debt. They're going to qualify the loan. Again, you'll definitely want to check this out as these programs of what assets they'll use, what percentage. So just because you have stocks, it does not necessarily mean they're going to use 100% of that account balance to qualify you on. And again, the makeup of your debt and stuff like that all goes in and gets factored onto this type of program. Also with asset qualifier programs, these are typically not allowed on your primary residence because with primary residence, a lender needs to be able to show the ability to repay differently than they would on an investment property. So usually these asset qualifiers would be on a secondary or investment property. All right, if you have any questions, please reach out to me. I'll be happy to answer those questions for you. Again, down in the comment below. If you like the video, hit like button, subscribe so other people get this content as well. And look out for more videos coming very shortly on other types of non-QM products. All right, thank you very much. Have a great day.